Whew, boy. Yeah, good morning, guys. Welcome, guys. How are we doing? How are you doing? Welcome, 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 welcome. We're going to be running with the speed of light today. We're going to be running with the speed of light today. Yeah, good morning, Tanimola. How are you doing? Please, as you're joining us, let's know your name and where you're joining us from. Today's station would be very quick. Like, very fast because I need to go do some things very quick. So, I need to get this done. Let's know your name and where you are joining us from. Okay, give us your name and where you're joining us from so that we can move all in ASAP. So, Matthew from Kogi State, good to see you. Please, if you're joining us, let's know your name and where you're joining us from. Your name and where you are joining us from. Your name and where you are joining us from. Guys, Herenta from Lagos State, Ifi from Kaduna State, I'm Reverend Uday from Abuja. Good to see you guys. Good to see you. Aishaka from Nairobi. Good morning, good morning, good morning, good morning, everyone. So good to see you guys again. So last week we started off discussing uh, how to identify market reversal and retracement. So last week I was able to establish a lot of basics concerning retracement and reversal. I was able to differentiate between retracement and reversal for you guys last week, and we're not able to finish because I had to go do some things last week, which I need to just once I'm done with this, I have some other things I need to be doing today. So today's session will probably be like maybe 30 minutes or so. Then I would say goodbye to you guys and wish you all well for the week. So today's class, we continue from where we stopped. How many of you were here last week? If you were here last week, just type one on the chat. If you were here last week, just type one on the chat. One on the chat. If you were here last week, Armstrong from Cameroon, good to see you. From Kano, good to see you. So if you were here last week, please type one on the chat. Let me know that you were here last week so that we can proceed ASAP. Okay, I can see Tanimula typing one. Who else was here last week? Okay, I can see one on the chat. Okay, that's fine. That's fine. That's fine. That's fine. Because I wanted to go through, maybe do an extensive recap, but I can see fairly a good number of you were here last week. So I'll just go ahead and just do just a very brief recap. Then we dive into what we have to do today. Okay. I thought about postponing today's class, but we already have something scheduled to teach next week. So I didn't want to carry this over next week. So that's why we have to just rush. So last week I told you guys that a reversal is clearly not a retracement. A reversal is simply an extended retracement. Okay, every reversal starts as a retracement, but not every retracement becomes a reversal. Okay, and we explained last week that reversals happen when a retracement, that means on a bullish trend. A reversal has happened on a bullish trend when we have successive lower lows and lower highs, when the market has failed to broken and closed below a previous low, and also has failed to actually give a higher high. In that case, we can clearly say that we have a market reversal. And I also mentioned that retracement is simply a quest for the market to grab liquidity in order to continue in the original direction. These are some of the things I explained last week. And I also told you guys that when a retracement happens, it simply means that the market is actually just looking for liquidity. Because for a market to buy, there must be sellers, and for the market to sell, there must be buyers. Can you guys still see me? Why is I think can you guys still see me? Can you guys still see me? I think it's hanging on my end. I don't know what's the problem. Is it same on your end? What's happening on your end, guys? What is happening on your end? Can you guys see me? Can you guys hear me? Okay, okay, okay. But can you guys see me now? Are we good to go? Oh God, my network is just terrible, man. Okay, let me just quickly swap network. Let me just quickly swap network. Okay, so is it better now? Can you guys see me? Can you guys see me? Can you guys see me? Is it much better now? Okay, I think it's good now, right? It's good now. You guys can see me waving. You guys can see me waving. So I think we're good to go, right? Okay, 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 good. So it's better now. I can see you guys saying it's better now. Amazing. So good. It's better now. Good. I can see you guys saying that. So that said, what we'll be discussing this week is how to actually make real money using spotting reversals. Okay, because anytime a retracement fails, most times the reversal that follows it is usually very, very massive. Every market situation where it's looking like a retracement but it's actually a reversal, and the reversal actually happens, the number of pips you can grab from that kind of market is usually much more higher than you can grab from any other just regular trending market. Okay, that's why it's very, very vital to learn how to grab a lot of pips using what I'll be teaching you this morning. Okay, so let me go ahead and present my chart. Let me first of all, I think, let me start with the paint tool. There are two ways I want to teach you guys to be able to good. Good. So I hope my screen is clear enough. My screen is clear enough. Okay. So there are two ways I will teach you today to be for you to how to trade reversal patterns. Number one is the Fibonacci method. Now, the Fibonacci method is one of the most effective methods I've personally used to actually grab a lot of pips in the market. Somebody saying the video is still hanging. I mean, is it still hanging? What's really happening here? Is the video still hanging? Can you guys? Ah, oh my God, what's happening? What's happening? What's happening? Why is my network terrible this early morning? Is it good now? Is it good now, guys? Is it good now? Oh God, I don't like this network stuff, man. Is it good now? Can you guys hear me? Okay, say we can see you, but the video is hanging. Okay, it's not hanging from my end. You're not moving. Okay, well, I'm moving now. I'm moving now. I can see that. I can see myself clearly here. So I think it's working now. Okay, so Fibonacci method is one of the methods that I use mostly. I love using to actually, grab a lot of possible moves in the market. Now let's go to the chart. Let me show you guys something very, very spectacular. Okay. Now, what I was trying to explain, I think, let me just use paint first of all. What I was trying to explain with what I said is anytime on a normal day, this is what a retracement looks like. This is what a retracement looks like. Let's say the market went up, impulsive move, retracement, something like this, then goes down, retracement, something like this, impulsive move again. Okay, so from here to here is the retracement. From here to here is what we call retracement, right? From here to here is retracement. From here to here is the retracement, right? From here to here is the retracement. Now, every single time something that looks like a retracement unfortunately doesn't finally become a retracement, the reversal that follows it is what people call a breakout. For instance, let's say this market was on its way down, did another impulsive move, then was about to do a retracement, which is this move right here. It was about to do a retracement, but unfortunately, this previous low right here, which is where we are hoping that would have become a support, if it doesn't hold, what happens here most times is what people call a breakout. So your ability to make a lot of pips, grab a lot of pips in the market lies on your skill and your ability to easily discern what when a reversal is about to happen and is looking like a retracement. If I go to the chart, this thing should become more clear, but I just want you to get the basic. This is like the theoretical aspect. We're still going into the chart. Let me show you how it actually happens on the chart, okay, and how you can spot this very, very easily using a Fibonacci. Okay. Okay, are you guys following? If you're following, please let me know you're following because we're going to the chat now and I don't want you guys to miss out. Are you following? If you're following, type something. Let me see on the chat that you guys are following. If you're following, if my screen is clear, everything is good. We're on the chat right now. Let me look for where I can use to show you guys what I am talking about. PUSD. Let me go with GBPUSD. This is exactly what I'm looking for. Something like this. Something like this. Now we have this trend. Okay, good. I can see you guys following. Amazing, 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 amazing. Good. So we have this trend right here, which is clearly on a downtrend. Even the blind can see that this is clearly a downtrend. We're having series of lower lows, lower highs, lower lows, lower highs, lower lows, lower lows, lower highs. And the market is about to again give us the next impulsive move. This is what we we should be expecting on this market if this downtrend is going to actually continue. Now, if I put a Fibonacci from here to here, from here to here, from here to here, you will see a consistent levels of Fibonacci that this market is actually obeying. Now, this is where we are going to check now. Let me make this bigger. Good. Let me isolate this. Let me remove this so that you guys can be seeing everything clear enough. Good. Okay, good. Good. Let's check all the impulsive moves. Let me show you something using a Fibonacci. Let's start from here. These are the moves we have so far. This is what we're going to test from here to here. We check the impulsive move from here, the corrective move from here to here. Then we'll go ahead and check this one over here, from here to here, and the impulsive move on the corrective move from here to here. Okay, because you guys already know, if you don't already know, Fibonacci is used to follow trend. I use it to follow trend. People use it for a lot of things, but I personally use it to follow trends. Okay, from here to here, corrective move to this point, then this impulsive move again. Okay, so let's check these three places I've showed you guys. Then you will see that when it comes to this one, there is a difference to that, how it reacts to a Fibonacci. Okay, let's me grab a Fibonacci. Now, this is the first impulsive move we're going to test, from swing high to swing low, swing high to swing low. You can clearly see from swing high to swing low on this. Let me make it bigger. You can see that this market, this is where swing high is. The markets from here, impulsive move from this red candle here down to where this bottom is. The market reversed, tossed, reacted from a Fibonacci 61.8 level and bounced off the Fibonacci level and gave us a lower low. This is what I'm talking about. From here to here, reversed to a 61.8 Fibonacci, reacted from the level, broke below the 0% level, and then gave us a lower low. This is a typical reaction in the market when it is actually a retracement. It will either obey a 23.6% level, 38.2% level, 50% level, or 61.8% level. Now, I know I'm assuming everybody's understanding what I'm saying. I know some of you might not really be understanding these things I'm saying, and there's no other way I can make it more basic. If you really want to learn these things like fully, you can just join our mentorship program fully, where you can just start from basics. Okay, I can't just, I don't know how to make it more simpler than this, because there's really no time. Okay, but you should know how to use the Fibonacci. If you don't know how to use it, okay, please learn. Okay, or maybe join us to learn how to use it. Okay, now you can clearly see that this market bounced off 61.8, which is normally how a healthy trend should actually be. Now we've checked the first one. Let's go ahead and check the second one. The second one is from here to here. Then we got a retracement and then got a lower low. Okay, so we're going to test this one again using a Fibonacci, and you will see the reaction from one of the Fibonacci levels. Okay, now let's see again. Let me grab my Fibonacci. Swing high, sorry, to swing low. You can clearly see that the market came. See what is happening on it. Let me extend this a bit so you can see this 1.8 level. Well, okay, good. Good. Now see what happened again on this one. Swing high, swing low. The market came back to a Fibonacci level 61.8, exactly the same place it reversed the last time. 61.8 level. It reversed, bounced up, ranged there for a while, and then gave us a lower low, which is what we are seeing here. Swing high, swing low, reverse to 61.8 level, then gave us a lower low. This is how a healthy trend usually is. Okay, now let's look at now what happened when the market was now about to give us a breakout, which is this one right here. From here, swing high, swing low, then this is what we have. Okay, Now let's look at it using a Fibonacci. Then you see that there's probably an inconsistency with what you have seen already, as I've shown you in those previous two reversal levels that happened on the 61.8 on Fibonacci. Now let's look at it. Let me show you. Swing high here, swing low. Now, are you seeing an inconsistency here? You can clearly see that the market came to this this level. This is where swing high started. This is the low. Then the market, first of all, reversed from a 38.2, then went ahead to break above a 50% and a 61.8% and closed above it. Many people don't pay attention to this little. These are the little intricacies of trading that can give you undue advantages, because some people will assume that since we have this red candle coming down again, it means that this Fibonacci level is still valid. But most times that's not usually the truth. That's 80% of the time it doesn't happen that way. Anytime you see the market clearly breaks and closes above a 61.8 level, the trend, that reversal is likely, that retracement, sorry, is likely to become a reversal. And if the retracement, sorry, truly becomes a reversal, what you get next is a breakout. When I see this kind of things happen in the market, first thing I do is to put a level. Okay, I put the most significant previous support or resistance level, which in this case would be here, right here. Because why this level is significant is because it has been a support multiple times. It was a support here, became a resistance here, and is also a resistance at this point. At any instance, this market now breaks and closes above this level. If we get any blue candle, let's say blue candle close above this, we are clearly going to have a breakout happen on this. That's the next thing. That's the next thing that will likely happen. Once we get a blue candle break and close above this level, which has clearly reversed above the 61.8% level, the next thing is usually a breakout. 70 to 80% of the time, it is a breakout that usually follows. Now, let me fast forward. Let's see what actually happens on this. Be watching this level. This is a level to watch right now, okay? Once we get a break and close above it, most of the time, what follows is a breakout. At this candle right here, let me remove the Fibonacci now. At this level right here, what will likely follow this is a breakout. It usually rallies upward. Why? Because let me tell you why it happens that way, because you need to know why it happens, okay? I'm not just teaching you theory. I'm not just teaching you, practical. You guys need to know the theory behind it. The reason why it happens that way is because just like the same way you know that every trader right here will be looking for an opportunity to sell, every trader right here, they know that when the market got here, it sold here, sold here, sold here, sold here. Anytime the market now goes above the Fibonacci level, which it initially reversed multiple times, anything from 2 times, 3 times, a reverse from the same Fibonacci level, anytime the market breaks and closes above it, a breakout is likely about to happen. In which case, this is what happened here. Are you guys seeing this long breakout? The market came back, retested the level, and this is where the reversal started happening. All this way up. Are you guys following? Did you guys catch what I'm explaining? Do I need to explain it again? Are you seeing this uptrend? This is where this whole move right here, this whole move from here to here, you might think that this is where it started, but that's not the truth. This is where this move actually started. This is where this bullish trend, after this blue candle, this is where the trend actually changed. Where you can say that the trend has changed is after this candle right here. This is where the trend changed. After this blue candle, this is where the trend clearly changed. Are you guys following? Are you guys following? If you're following, let me know that you're following, because I just hope this is not flying above you guys' head. Is this thing flying above your head? Sometimes the mistakes that we make, especially professional traders that are good in trading, we make the assumption that every other person should know these basics. You understand? So sometimes when I teach, I forget that there are some people following me that are even hearing forex for the first time, and it's a bit difficult. Some of them don't even know what Fibonacci, what do you mean by higher highs, higher lows. Some of the terms we're even using is as if it's flying over their heads. So I'm sympathetic with you, but I don't know how to help it. You understand? Because of course, a lot of YouTube channels that you can learn basics. Okay, I'm not the person that teach. I don't teach basics per se. People that enjoy my channel the most are traders that have been trading for a while, at least. At least it's easier for you guys to follow. Somebody say yes, so it is flat. Okay, okay, okay. I'm glad you guys are following. I know a lot of most of the people that follow my channel are usually not beginners per se, because I don't teach beginner stuff. You understand? Candlestick pattern, what's bully, what's doji, what's engulfing candle, what's I really don't teach those stuff, man. So I'm glad you guys are following. I'm glad. I'm glad you guys are following. So that's a very simple way to actually catch a breakout. Okay, once you see that stuff happen in the market, a breakout is usually going to follow it. Now let me go ahead and give you another example. I wish maybe we'll just do part 3 on this. Or the way it's looking now, I think we need, because I need to teach you how to catch this using a moving average. We've done for uptrend. Let me teach you how to catch using a downtrend. So I'll show another example, and that will be all for today. Then probably next week we'll just do part 3 of this, when I'll now teach you how to catch it using a moving average. In fact, the one for moving average, most times, to be sincere with you, is usually my best. I love catching reversals using moving average. Okay, I've been able to make a lot of money on Euro JPY last week using the same thing I'm teaching you, which I will teach you guys, next week. Euro JPY, I'm sure you guys Euro JPY, very sweet, gave me a lot of money. Euro JPY satisfied me a lot last week. Okay, and let me show you guys where I was able to catch this on Euro JPY, and I did that using a very, very significant lot size. So we're at about this point, this red candle right here. I mean, I've been riding this. I closed about this point last week, when the market was about this point last week. That was, I think, on Thursday. That was when I closed out my position on Euro JPY. So I milked over 70 pips or so on this, and with a very high low, because I was so sure it was going to. It was a no-brainer. But I'll show you guys how to do that next week. Okay. Okay, you guys have not even seen my screen. Wait. Sorry, guys. I thought you guys were seeing my screen. So, sorry, guys. See, I can see you guys still complaining. You guys should be able to see my screen now. Yeah, so that's what I'm showing you guys on Euro JPY. So this is about where I entered this market right here on Euro JPY. Somewhere at about this point, I entered this market, and I've been milking this market all the way, all the way, all the way, all the way. Okay, so that's it. Let me go back to where I was teaching. Okay, so let me look for an example where a downtrend, an uptrend actually changed to a downtrend. Then I'll show you the example again. These things are not premeditated, so it's not like I didn't check anything. In fact, go ahead, if you guys can just suggest a chart, just suggest a currency pair, so I can tell you guys this is not premeditated. I didn't plan anything. These are things you see on the chart. 70% of the time that's what happens. So someone should suggest a currency pair. Let's analyze a currency pair when an uptrend changed to a downtrend, and I'll show you exactly the same thing I showed you that happened in the previous example. Somebody said GBP USD. You see what GBP USD we just finished? We just finished GBP. I think GBP USD is the example I showed you guys now, right? Yeah, it was GBP USD. Somebody should suggest something else. Somebody said NZD card. Okay, good. NZD card looks much more, weird. So let's go with NZD card. So let me look for an example where a downtrend became an uptrend. Sorry, became a downtrend. Good. I think okay. I think this is good enough. This is good enough. This is good enough. Let's use from here to this point. Good. Now we can clearly see there are a lot of corrective move on this. I think I need to use 1 hour on this course. 4 hours looks very okay. Let's do 4 hours. 4 hours is fine, but I just need to zoom in and probably increase this thing a lot. Okay, so we have a lot of both corrective and impulsive moves here that we pay attention to. Okay, now this is what we have. We have this move from here to here, corrective move, then give us a higher high. This is number one. We have the second move from here to here, corrective move, then give us a higher high. Okay, number two. Number three, we have this move from here, let me move it down a bit. There's a lot. I can't do more than three, so that we don't waste much time, because I need to go right now. And these ones are too small. These ones are too small to use a Fibonacci clearly for you guys to see how it works. Unless I'll just increase it like this. I think that's what I'll do. Okay, fine. So let's see how we can make this work now. Okay, so let's use here. Let's use these little ones here. Now this is impulsive move from here to here. Sorry, this is what I'm looking for. Impulsive move from here to here. Then we have a higher high. Okay, and then we can't use this chart. It's too the trend is too long. It's too long for me to be able to capture like three. Okay, so let me just go backwards a little bit more. Let me go backwards a little bit more. The trend is too long for me to put a Fibonacci in such a way that you guys can see what I'm trying to explain much clearly. Okay, let me look for somewhere else that is a bit more. Oh, okay, 3, 4, 5. Okay, I think this should be okay. This is where we were before. This was exactly where we were before. Let's keep going. NZD car ranges a lot. Wow, it trends a lot. So I'm seeing a lot of opportunities where this thing can work, but I want the most significant so that it's not. I can easily put a Fibonacci on it, and you guys can see it more clearly. Can see even all these places. This is exactly what I'm telling you guys. Oh my god. Please just exercise patience. I want to use the one that you guys can clearly see. I don't want to just pick any example. I'm seeing a lot. I've seen a lot scrolling, but I need the one that the reversal is clean, the retracement is clean. Then we'll test what I just taught you guys with Fibonacci, and you guys can see for yourself what I just explained. So just exercise questions. These retracements are too weak. They are just too weak. But I think I'll just have to just make do with what we have. So let's use this. Let's just make use of this. The retracements on here are a bit weak, but I think we can manage it. Let me increase this. Good. So this is an impulse move from here to here, from here to here, retracement, higher high. Okay. And also we have from here to here, impulsive move, impulsive move, then retracement, then higher high. Okay. So let's just test these two that I just showed you. Let's test it using Fibonacci. Okay. Good. So let's start with this one. So are you guys following? Hope somebody said, sir, please. Yes, this live video can be watched later. Somebody is asking. Yes, you can watch it later, of course. So swing low. I can actually start with the week, but it's just too long. But however, let's just do it. Okay, swing low, swing high, market retraced, got back to which level? 38.2. This is what I'm showing you for those who are not seeing it. From here, swing high, the market got to 38.2 Fibonacci level, reverse from it, and then give us a higher high. Okay, very simple. You obeyed the 38.2 level. Now let's go again. Let's go up again. Let's test the next one, which is this one. This is the next level we're testing now. From here, swing low, swing high. The market got to which level? Between 38.2 and 50%, the market bounced off and gave us this higher high right here. Okay, clear enough. Now let's go. Let's see this one. Swing low, swing high to this point, to this one right here. The market got to 23, between 23.6 and 38.2 level. We got this retracement move right here, and the market bounced off and gave us a higher high. See what I'm showing you? From here to here, bounced off here, gave us a higher high. Okay, now look at where things now changed on this one. This is the next level here. Swing low here, swing high here. Now we saw this market right here. First of all, break and close below this 61 point. This is the candle I'm talking about. Let me go back 2 candles. Can I go back 2 candles? Okay. Good. Now, as at when you're seeing this candle break and close this 61.8 level, this is where the trend has actually changed. In fact, it closed 2 candles. First one as a doji, and the second, bearish candle right here. Let me draw. How did I pick this? Good. So at this point, you're seeing this red candle formed below this 61.8, 2 candles close below this 61.8. This trend has already likely changed, or it is changed. All you just need to do now is just to look for a confirmation. And like I already taught you, the next thing I do here is to look for the most significant previous support or resistance level, key levels. Key levels, I mean, are levels that have been support and resistance in the past, which from what we can see clearly is this level right here. This level. This now becomes my key level. What I do now is to wait. Once I get a break and close below this, the trend has changed as far as I'm concerned. Because the market has been obeying our Fibonacci levels. It bounced up from 38.2 here, bounced up from 23.6 here, bounced up from 38.2 here, and the market has broken and closed below the 61.8 level here. And our next major key level is this one right here. So once we get a break and close below this key level which I've drawn here, which was a previous resistance here, resistance here, resistance here, then if we get a break and close below this, we are definitely going to see Okay. Hey guys, are we back? Are we back? Can you guys hear me? Are we back? Oh god, network is just terrible and it's really just so annoying. This network is really annoying. Can you guys see me? Are we back? Are we back? Is the live stream back now? Oh boy, oh boy, oh boy, oh boy, oh boy. Okay, I think you guys should be able to see me now and you should be able to hear me. You see why? I mean, everybody in this country needs to jump back. I'm using like I've swapped my network like 3 times from like I have like two phones there. I've swapped network multiple times, but I don't know, just crazy here. But it's all good. So this is where we stopped. This is where we stopped. I was showing you guys that if we get a break and close below this, we're actually good in for a breakout about to happen. Okay, let me share my screen again. I don't think my screen is showing. Okay, so this should be good enough now. Okay, so we can see, let's move this market. Let's see what happened. We see the first touch. The market has come down to touch this our key level, which is where we would actually, be able to tell when the market has actually fully reversed. Okay, the market came, touched, bounced off from there. Good. At this level right here, this is where the market has fully reversed and is actually ripe for an entry right here. From this red candle, you see break and close below this. Now, if you've been following, we can clearly see, as a matter of recap, is that there are three things to look out for if you want to look out for when the market has fully reversed and ready to catch a breakout. Okay, number one is when the market has been consistently in the past obeying and reversing from a particular Fibonacci level. Secondly, all of a sudden the market stops reversing from the levels which it reversed from in the past, breaks and closes below or above the 61.8% level. Now, there are different levels on Fibonacci. There are different levels that people use on Fibonacci, but this is my own levels, okay? 23.6 level, 38.2 level, 50% level, and 61.8% level, okay? Those are my personal levels. So anytime I see a break and close below or above the 61.8% level, in case of an uptrend or a downtrend, as the case may be, in that case, I now go ahead to draw the most significant previous support key levels. Emphasis on, don't just go and pick any of the level. Don't just go and just pick a key level that has been a previous support and a resistance in the past, or has been a previous support multiple times in the past. Once you get a break and close below that, then a breakout is impending. That's the next thing. Okay, that's usually the next thing that happens. In this case, as you can see right here, the market just kept rallying all the way down, all the way down, all the way down. So if you have entered after this red candle, you would have caught all these pips from here to here. Most significant, next level targets are probably just here. It might not get there, I don't know, but this would give you a lot of pips in the market. I mean, look at all these pips. Look at all these pips. This is over. This is over how many pips? This is over 150 pips thereabout in the market. Now, remember that this thing, we're using a 4-hour time frame. Okay, if you do this on a daily time frame, you can catch as much as 1,000 pips, 2,000 pips. If you do this on a weekly time frame, you can catch crazy amount of pips. So it must not be 4-hour time. I'm using 4-hour time frame because I don't want us to go far into the chart. This is like 2014, 2013. I don't want us to go that far into the chart. Okay, so that's what I'm using for. But if you do this on a daily time frame and 4-hour time frame, you can catch crazy amounts of pips in the market that will make you crazy money, man. Like really crazy. Okay, so that's it so far. Like I said, if some of these things I'm teaching, if it's flying over your head, or if you want to know how to do this much more in depth, you want to learn it very well, we have a mentorship program that you can actually join. It's a one-time payment, lifetime access to me and my team of traders, where we can teach you how to trade from scratch. Like, even if you know nothing, like the training starts from what is Forex. So even if you know nothing, this is your first time hearing about Forex, joining that training program will help you brush you up, give you everything you need to know about the training program. Okay, so let me just show you the website before I go. The website is www.tradewave.ng. So typically, this is the website. This is what the website actually looks like. Okay, this is loading for. That's the website. If you want to check out our training program and how it actually works, go to this. Boy, what am I doing? Okay, so that's the website right there. Go ahead, check check if you want to learn more about how to trade and what we offer. We have trading robots, we have training programs, just a lot of stuff that might really interest you to learn from. Okay, so that said, I love you guys. Keep trading. On Thursday we'll be trading again live. We'll be coming live on YouTube to trade with you guys. So don't miss Thursday's live trading session. It's going to be life changing. Last week we dropped, I think it was 3 signals by one of our senior analysts. Two of the signals I think hit tick profit. Last week was three. I think three of them hit TP. No, I think USDC actually they hit TP. It was like stop loss or so. But we trade live with you guys every week, every Thursday. So don't miss our training and don't miss our trading live training session on Thursday. It's going to really be amazing and life changing. So if you've learned anything so far, drop something on the chat, drop a comment on the chat. Let me know you guys have learned something before I wave you guys goodbye in 2019, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, and 4, and 3, and 2, and 1. So I love you guys. Keep trading. Enjoy your time. Have a wonderful week ahead. I can see you guys typing. Thank you, thank you, thank you, thank you. Value. So catch you guys some other time. Some other time. So have a wonderful time in the market and goodbye. Have a wonderful day.